This is the strategy. So we still have to take the salary, and this is where I see actually the misalignment. I see some clients that come to us from other accountants where they just, everything is just goes towards the salary, and then there's no like a distribution. So basically, if you just put all the money towards the salary, that means that you're overpaying in taxes. Clients come from other accountants, then they have S corporations, they don't take any salary, and they just put everything towards this distribution, which is, I understand again the strategy behind it, because they avoiding of paying the self-employment tax, the unemployment insurance, so they're saving money on all the taxes, but that's not legal. So the IRS wants you to pay yourself a reasonable salary. So whatever reasonable, depending on your market. So depending on if you're a doctor, obviously for the doctors, the reasonable salary would be much higher versus if you're like a clerical employee. So they do want you to pay a reasonable salary, and then the rest you take it as a profit. So this way, when you split it like that, then you can save on a social security on self-employment taxes, which is typically 15.3%, which is a huge saving. Look at it this way, like if you're taking 10,000 out of the salary towards the distribution, so that's already $1,500 in savings. Now, if it's 30,000, so it all adds up. So when you have a corporation, and this is the advantage of having a corporation versus filing the tax return as a sole proprietor. Because when you have a corporation, you can take advantage of the accountable plan. So accountable plan allows you to reimburse your employees for certain expenses, and the expenses can be like the telephone, it can be like gas, tolls, parking, vehicle, and many other expenses. And you can even expand even more. So let's say if you have kids, there is another strategy. It's to employ your family members and to pay. You can pay your spouse, you can pay your children for the legitimate work that they do in your business, and you can actually deduct it. So let's say if you're hiring your children, obviously they need to be reasonable age to be able to work with you and help you to do certain work. So let's say like for this year, the standard deduction is $15,750. So now imagine if you, if we'll take the same example, right? With the 100,000 that you're making, you're taking 50,000 as a salary, and then you have 50,000, we deducted 20,000 accountable plan, we have 30 left. So now let's say out of this 30,000, we pay 15,750 to a child. So now you see it reduces even more profit. And then by paying the children, then you don't have to pay the federal taxes, and depending where you live, if you live in the states where there is no state taxes, so then you're not paying any taxes. So there's a lot of different strategies that can be utilized, yeah. So that's why you see like there's no like one size fits all. Like I said, like some just putting everything towards salary, some just putting everything towards distribution. No, it's being creative and utilizing all different strategies, and the idea is we can just combine them. There's no one strategy to use. We can use all of the strategies.